So we are just going to be getting started. So today we are going to be talking about, I call it a easy PC 360, but the truth is I derived that from two free indicators that you have on your MT4. And as I always say, if you want to browse, which one will you use? Will you use this? I happen to find out this cell phone on my desk here. This is a Nokia. This is also, I don't even know the name of this one. This is itel or whatever that is written on it. So if you want to, you can use these two cell phones. You can use them to make phone calls. You can use them to send text messages. But there are a lot of things that you cannot use them to do. For instance, if you want to connect with this training with any of these two phones, it will be very difficult. If you want to solve the net with any of these two phones, it will be very difficult. But not that they can't work as far as what they are meant to do, like making phone calls, receiving text messages, and do some basic things. That is what these are for. But then we also have what we call smartphones, even though not all smartphones are smart. So like you have these ones, you can do anything. In fact, all my sermons, all my messages, our Bible studies, my books, audio books, everything is on this. And of course, even though I love to trade using my desktop and laptop, but trust me, everything, this is like my mobile office. Everything I do is on this. So the same thing is indicators. Some of these indicators were invented when there was nothing like high frequency trading, when there was nothing like Facebook, when there was nothing like Apple, when there was nothing like what is going on right now. A lot of money in the market and a lot of free newbies in the market. I don't even know what the market is doing. So in order for you to use most of those indicators, you have to tweak them, you have to adjust them just the way we have our cell phone. So, and that's why we're going to be talking about what I call the easy PC system today. So let me, for instance, like this, like if you look at this now, based on stochastic will tell you that, okay, this is oversold, right? Anything from here, like right here, this is oversold. So you are not expected to, to sell from here because you'll be expecting the markets to return. But then when you look very well, even though there is oversold, I mean, this is the system you guys are familiar with, this Stratomatic. But take a look at where this system is oversold. Okay, take a look at here. And take a look at here. And see how far it still went down, retrace, and still continue down. So that is just to tell you that indicator just simply means indicating. It means that, okay, the system indicates. So, and that is why when you have an indicator, you want to, try to confirm whatever you are doing with another indicator to create a system. Not that maybe the indicators are not working, not that maybe the systems are not working, but then, as I said, we'll be talking about different systems today, which I call the Easy PC 360, but they are created from two free indicators, which the first one is Bill Williams alligator. So this is Bill Williams alligator right here. So this is alligator. And this also was invented by Bill Williams, which is an awesome indicator. Okay, so these two combined with my own customized indicators create what I call the Easy PC 360. Now, why this? Why these indicators? Why this one? Why not what we have been using? As I said, not that what we have been using they are not working, but sometimes also you want to look into the system, what is happening in the market. It's just like a regular mechanic shop. You will see spanner of different sizes. You will see screwdrivers, you will see pliers, and so on and so forth. So the tool that you use depends on what you are working on. So the market, gone were those days when you could just, look at the charts and oh, this is downtrend, and you enter the trade. Sometimes you don't even use stop loss. That used to be my strategy. No stop loss, and just let the system ride. If you do that these days, you will have your fingers to bite. So the same thing is what is happening in the markets. So why are we talking about this? Bill Williams wrote about these indicators officially in 1995. So when you look at that, 1995 is still very early compared to most of the indicators that were found in early 90s. So he discovered that markets actually trend at 15 to 30% of the time. Okay, that was what he found out, that markets actually trend 15 to 30% of the time. So it therefore means that over 70% of the time, markets do what? Market ranges. So what are we saying? So it does not mean that you cannot trade within this time. And remember the time frame when we're talking about trend now. I hope you know by now, if you're one of my students, that when we talk about trend, it's a function of the time frame that you are using. It's a function of time frame you are using, because if you are trading on daily charts, if you are looking at the trend and you say the trend is up, okay, somebody that is trading on 1 minute might be looking at the same chart and he or she will say the trend is down. So the trend we are talking about here is a function of the time frame you are trading. Okay, I hope that is clear. If you can hear me very clearly and you at least you are up to where I am, please just go ahead and type yes. I disabled people to be able to talk because some people just make noise on training, but I'm going to enable you guys to be able to. Mr. Bode, good to see you. I see your hand up. Good to see you, sir. Okay, so as I said, the trend you are working with really matters. So, and that is why I came up with this system and I add it together with other tools that some of us were familiar with to kind of help us. Number one, this is a 200 moving average. So this is a 200 moving average. Before, I used 50 EMA. As some of you know, we have 50 EMA. That's what we use with Tradermatic and some of other systems that we use. But then I discovered that a 50 EMA is actually for medium trend, not short term and not long term. But these days I've been testing different prop firms and this and that. And most of all these prop firms, they expect you to just trade on either 1 minute or 5 minutes. So if you are trading on 1 minute, 5 minutes or thereabouts, you cannot be, basing your trading on a long-term trend indicators. And that is why I came up with this. So once again, this is an alligator, as it's been called, bill indicator, and it's right there on your MT4. You have, this is the lip according to Bill Williams. This is the lip, this is the teeth, this is the teeth, and this is the jaw. So just like a regular alligator. So when alligator sleeps, then it means the market is sleeping. When alligator wakes up, it's ready to eat. So it therefore means that it opens its mouth. And the moment the mouth is open, what are you expecting? For it to continue eating. An alligator cannot continue eating for life. It will get to a time that it's full, like this, and it will begin to close the mouth. So that is where we introduce our phoenix also right there. Now, when you look at this phoenix, who can notice the difference? What is difference in this phoenix that you are seeing compares to the one that you know? I'm going to enable this you guys to be able to talk, because I hate talking to myself. But then when you have noise at your background, please make sure you mute your line. Okay. All right. Okay, good. So I just asked a question. I said, looking at this Phoenix, who can tell me what differentiates it from the one that we are used to? I believe you guys can talk. Somebody can just enable and talk. Who is there?
So yeah, Apostle, yeah, one thing I can say is possibly that we don't have different sizes of Phoenix now. It's just
Okay.
one big Phoenix. Yeah, which is one difference I can see there. That
Right.
before we used to have different sizes of Phoenix.
Right.
So I don't know if that's the only change, but it looks a bit cleaner on this chart.
Right. So you're actually right. So what I did is that I remove, if you go to indicators list and you click on Phoenix. So basically what I did was I removed the color from the other ones. The Phoenix are just your support and resistance level. But I discovered that there are a lot of noise, using all of these. So that's why we only use the major ones. If I let's do something. If I put back hold on a second, let me use this is US 30. Let's do something real quick. That's a US 30. Okay. So if I come to Phoenix and I use the default, which is this. So this is the default that we're used to. So if you have this, you see what we have over here. So there are a lot of bumps on the way. Let me bring it over here. Okay, so this is since we are on 15 minutes on the other ones, let's bring it to 15 minutes. Okay. All right. Okay, so take a look at this. We have this right here. So the red one is here. So I know that the moment I see this red one, what I'm expecting again is the green one, which I see right here. So the moment I see this green and the market crosses the green up, what I'm expecting again is the red. Now, sometimes it happens that the market will go up, okay? It will go up and eventually come back again even before we have the final, and that is where all of this comes together, and I'm going to be explaining it. Just work with me. So now taking a look at this one here, then take a look at this here. So you will see a lot of bumps on the way. Okay, you will see this is 15 minutes US 30. This is 15 minutes US 30. Okay, let's take a look from here. From here right there. You see this one. You see this one. Then you will see green right here. Now let's take a look at this. We see this and we see this green. But between the green, there is this gold one. Then between this green and this one also, you can see different ones. Then also here, you see all this. So sometimes if you don't know what you are doing, it confuses you, even though they are good one way or the other. For instance, now if you enter a trade here and you see this one, you exit your trade. And of course, you think, okay, maybe it's going to reverse, but take a look at right there. It doesn't really reverse. The market just consolidates there and breaks down again. So I discovered that, okay, you know what, all this up and down of these middle ones. So let's just say, let's cut the crap. And that is exactly what I did. And that was why I put just only the big one. Does that make sense now? Does that make sense? So, but if you still want to use all these ones, you can enable it by yourself. But that's why I showed you. It's not just for you to, so you can see this, but I know that the moment I see this one, what I'm expecting is the green one. And you can even see right here, the market is consolidating. And so I just feel that, okay, that noise is too much. The essence of using what I'm using is to reduce the noise. And that is why we have this. In fact, if you want to kill this again, you can even, instead of this regular candle, which I prefer the regular candle, by the way, with this system, but you can decide to use Ekinashi. If you use Ekinashi, you will, what you are going to be having, will be, it will look different to this. But let's just continue anyway with this. Now, so that is what we have. So we have this alligator, then we have the 200, moving average. Is a simple moving average applied to close. Then we have this alligator right here. So the alligator uses 3 moving average but smooth moving average. When you click on that and you go to parameters, you can see the ellipse is 5 moving average. Okay, the shift is by 3. Then the fit is 8 moving average. The shift is by 5. And the just is 13 moving average. That is smooth moving average. And the shift by 8. So that is why we have that. And this is just, so it's a default value. Nothing is actually edited from it, but you can see the method is a smooth moving average. So how do you trade this? Based on the Mr. Williams, Bill Williams, when you see the trend, when you see the lip is below the teeth and the teeth is below the jaw, it means the trend is down. Okay, once again, once you see the green is below the red and red is below blue, the trend is down. Now, the moment you see 3 of them coming together, you know that, okay, alligator is about to sleep, you exit your trade. So what I did is introduce Phoenix. So once I see my opposite Phoenix, I exit the trade. Or sometimes when I see, even right here, when I see the opposite, because you can see right there, this is by the same author. This is Awesome Oscillator. It works like a MACD, but what it just did, just like my MACD Pro, it just edited MACD, the original MACD, to form Awesome Oscillator. So once you see that the market is going, the MACD, which is Awesome Oscillator right here, is reversing to the other side, you can at the same time exit your trade. But based on the testing I have done so far, even though it's reversing like this, the moment is still below 0 line, okay, the trend can still continue down. I mean, take a look. This is where we have it, but see how far it still went down. So it depends. Remember, we have 2 types of traders. We have conservative and we have aggressive. If you are conservative, the moment you see this one, you can decide to exit your trade. Now, what are the rules? The rules is, what are the rules to buy, to go long? Number 1, to go long, okay, the market must be above 200 moving average. Let's try and type, stop sharing. Let me bring out this. So now to buy, to go long, the market, or what you can call the price, must be above, okay, the 200 simple moving average. That is number 1. Then number 2, the grain must be above the red and must be above the blue. So once you have that, and of course the Awesome Oscillator must be above 0 or trending towards 0, and I will explain. So once you have that, so you have this to buy, the market or the price must be above 200, green must be above red, must be above blue. and the awesome oscillator must be equal to 0, and of course the price also, the price must be greater than that would be our grain Phoenix. Okay, so that is just what we have for buy. Okay, and this simply tells you that the trend is up. Okay, I mean, you know by now that when the trend is up, you are looking for an opportunity to what? To buy. When the trend is down, and I'm going to be showing you the example of what we're talking about. When the trend is down, you are looking for opportunity to what? To sell or short. Depends on the term you use. This is long. And when the trend is ranging, you stay off. Okay? The market. Just go and do whatever you do. So now also this one. So for you to sell, to go short, here we have the market or price must be below. Now, I will tell you, remember we talked about how you can trade also against the trend, okay? Now, this one here, let me put, I'm going to put asterisk because there are times that you are just too sure that, okay, this market has gone way away from 200 moving average, and you know that it's definitely coming back to it. So at that particular time, you can decide to trade against the trend of 200 moving average. 200 moving average is for long-term trend. So if the market has gone far away from it, you can decide to trade against the market, but then you know you are trying to you are catching that a falling knife, then you have to apply a serious caution when you are doing that. So the price must be less than 200 simple moving average. The grain, the same thing, but remember here now, the grain must be below the red and must be below the blue. Okay, so then also awesome indicator must be, remember we are selling, must be less than 0 or trending towards 0. Let me be sure of that. So like here, we're looking at short. So the awesome indicator must what? Must be trending towards 0 or less than 0. Yes, that is what I mean right there.
Are you sharing, sir?
Yeah, no, I just see. Yeah, I'm not sharing. So then also the price must be less than red finish. Can you guys still see my screen, please? Hello?
No, we can't see.
No.
Yes.
Oh,
No,
wow,
no,
sorry.
no.
Okay, sorry. So can you see now?
Yes.
Yes.
Okay. So the price should be less than red finish. Okay. So that's what I mean right there. So now, as I said, for buy, the price must be above 200 simple moving average, and I put double asterisk there that if you know what you are doing, if you're a little bit advanced, there are times that you trade against the trend. There are times you trade against the trend. Please, you can mute your line if you know that you have noise, please. Thank you. So the market sometimes also you trade against that. Then for you to buy, I said grain must be above red, must be above blue. Awesome oscillator must be above 0 or trending towards 0. Price must be greater than our grain Phoenix. Okay. With this one, you know you can go long and you apply your stop loss. We're going to talk about that. Stop loss, take profit. Now, then the short, okay, the market is less than 200 simple moving average. Grain is less than red and red less than blue. Awesome oscillator is less than 0 or trending towards 0, and price is less than red Phoenix. Now, where do you apply your stop loss? remember, in everything we do, if you look at my hand right here, I mean, to guide myself, you see, I have this wristband that I created for myself. I don't know if you guys can see. You see, CEST. Before I place any trade now, I look at that. And that kind of guide me that, hey, boy, be careful. So CEST. Now, every system you trade, you must have that at the back of your mind. What is CEST? We've talked about that. The C, the E, the S, and the T. So what is the C? The C is the condition, and that is what we just listed right here. So the condition to buy is what we list here. The condition to sell is what we list here. Now, the entry, you must always know your entry trigger. There are different ways by which you can know the entry. Either the market pulled away from your support and resistance, in this case, our Phoenix, or the crossover, like what I just showed you, and so on and so forth. Or you can see some structures, maybe like engulfing candles, all those still work together with your entry, especially if you are using the regular candle. Then the stop loss, your S is stop loss. Guys, I will tell you in my 16, 17 years of trading, okay, that what has costed me pain, okay, is trading without using stop loss. And I will repeat, you all know what happened to me last year. I'm still recovering from it. I'm still dealing with it. Lost close to $2 million in different accounts. It's as a result of not using stop loss. And if there's one thing I'm learning and I'm training myself big time, is for me to make sure I put stop loss in all my trades, because anything can happen at any time. Anything can happen at any time. The market will think that, oh, it's going up. Something happened yesterday. No, I actually traded this pair yesterday, US 30. I was trading on 5 minutes right here. I mean, it was a good day for me anyway, because when the news came out, I went long on US 30. Okay, went long US 30, and immediately I saw Phoenix. Let's see. Okay, so this was when the news came out. That was 7 around. That would be around 14, then 14:30, somewhere around that time anyway. So as you can see, this is the news right here. This is the news. Now, because I've been monitoring US 30 for a while, if you look at US 30, I mean, it was crazy, because I was expecting that, okay, right in this place, the market because we have so many levels. I mean, as you can see, this is a key level. 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 So I was expecting, okay, just like here, the market will bounce, in this place. But then it just broke it 2 days ago like nothing happened. Then, so yesterday, I marked this place as, okay, I knew for sure that the market will go back up. And of course, that was what it did. But then it was a tweak by the market movers. So when that happens, this was the news. So what I did, immediately I saw this. Now talking about, sometimes you trade against the trend, even though the alligator was sleeping right here. Okay, this was the news yesterday. So once this non-farm payroll, I don't know how many of you traded it. Once this non-farm payroll, I just bought. Okay, I actually did that. And when I bought, immediately I saw this Phoenix. Now, you see, immediately I saw this Phoenix, I exit my trade. I exit my trade because I knew that, okay, that is danger. Even when we went back down here, I just decided to stay off the market. Now, something happened in the afternoon. You see, though, it was going back up again. I was chatting with a friend. I was telling me, oh, yeah, it's just go back. I said, no, forget it. This market is a bait. And by the time I just went downstairs to eat, by the time I came back to my system, I just saw that the market has done this. Okay, so you have to imagine now if somebody plays a buy in this place and you didn't put stop loss, that account would have been a goner right there. So always, I used to say, okay, yeah, you have different trading strategies, except you are so sure that, okay, let's say for instance you have like a $10,000 account and you are trading like a 0.01 on a regular Forex pairs, not on indices or gold, because I tell you 0.01 can easily master, especially if you are trading with all these martingale or whatever strategies. Okay, so anyway, I guess that's kind of a picture of that. Let me continue what I was sharing with you guys. So we are here. So always make sure that your stop loss is in place. Then the T is our target. Now, the stop loss, where can you use the stop loss? Your stop loss can be, I learned this from a guy also that I've been monitoring for a while now. His name is Oliver Velex. I mean, it talks about one candle bar or one bar strategy, which I love so much, but sometimes it could be very tough. That is, if you are entering a trade, if this is where you are entering a trade, if you are buying, let's say for instance now, you decide, okay, I'm grow. Let's look for all these ones are just not really confirming our strategy. So let's take a look at let's look at USD card for a second. So this USD card, okay, you can see very, very clean. Let me remove this. Let me remove this so that I don't confuse you. Take a look at this. The market was ranging in this place. Take a look at this, ranging right there. Right there. As you can see, the market was ranging right there. Okay, I'm dealing with this one. You deal less with this, you deal more with this. So, and I see, okay, this is 200 moving average. So the moment I see all of these bumping consolidation above it, I was expecting that the market is going to go up. So immediately I saw this. Take a look at this. Immediately I saw this. At the opening of this second candle, I went long, and it fulfills all our rules. Okay, it fulfills all the rules. Number one, the market is above 200. Number two, green. If you look very well here, because I enter at the when this line breaks. Actually, I enter here. I enter here. So green is above red. Red is above blue. So now I was talking about one bar, okay, that here explains, even though I don't use it that often, that one bar means that if you enter here, your stop loss will come below here. But then I don't do that often. What I do, I will look at the lowest low, okay, the lowest low before my entry, which is this candle. So my stop loss right there, okay. The smaller your stop loss, the bigger your lot size. The smaller your stop loss, the bigger your lot size. And the bigger your stop loss, the smaller your lot size. Okay, so as you can see right there, so enter right there. So this is entry. And I'm going to show you how I combine this also with FX Sniper. Actually combine this with FX Sniper, and it makes it also easier. You can also combine this with inside bar strategy that we have learned. It also makes it easier. And I'm going to be showing you all of this. It might not be today, and if we have time, I'll do that. So now, once it breaks right there, your stop loss can be here. Now, if you are by your system, okay, once again, if you are by your system, I put my stop loss right there. Now, I measure if you want to do one-to-one. This is like 47 pips. You can measure 47 pips, but I don't do that. So what I do, I just leave it to run. Okay. The moment I see bumping like this, I can exit my trade, and sometimes I'll move my stop loss. So I'll move, this is my initial stop loss, I can move my stop loss. You use this red as your trailing stop loss. So I use the stop, so like here, this is where I will exit this trade right there, because you see. Now, the moment you see it comes back again and bounces from here, that will be another entry. But if you want to play it safe, just stay off. Why do you have to stay off? Because of this. Because of this, that is divergence right there. Because the market, the price is going up and the awesome oscillator is coming down. So you know that one way or the other, there's going to be a divergence. Okay, there's going to be a reversal. So you can decide to stay off. You don't have to trade all the time. You don't have to trade all the time. I repeat, you don't have to trade all the time. So that is how you buy. Okay, that is one way. The second way you can do this also, if you let me look for, if you are using MT5, the same thing you can do on MT5. As you can see, this is the same pair we talk about right there. Okay, this is the same pair we talk about. As you can see right there, you sell right there. Like some of the, like Phoenix is not working on MT5, but then if you know what you are doing on MT4, you can transfer that to MT5, because I noticed MT5 doesn't freeze the way MT4 freezes. So I like trading on MT5 kind of. So, but then if you understand basic things we've talked about, you will know that this is a reversal right there. And this is our 200 moving average right there. This is our alligator express. The market is what? Down. So if you enter right there, you can see also it's down. So you can exit your trade once you see this. And if you still want to ride it, you can exit the trade once it comes together like this. This is what I was talking about yesterday. If you follow the rules, you will guide against this, because if you enter, this is long and you enter long in this place, you put your stop loss in this place, look at what happened. The market just reversed right there. So we've talked about buy and we've talked about short. Now let me show you how you can combine this with some of other tools that we have used in the past. I think I have, let's take a look at this. Okay, so here, take a look at this. So I added some of the tools that we are familiar with also with it to form my Easy Peasy 360. So if you like the one we're talking about, USD card, which is still the same thing here. So if you enter in this place, it breaks right here. You see this one, and you know your pin bar very well. You know that this is a pin bar. So you can actually decide to, enter right there. So once you enter, your stop loss can come below right here. Okay. Now, why am I entering this place? If you look, this is my Fibonacci, this level, 23.6. And I know this is my 200 moving average. And I have my Phoenix right here. So where the price is greater than the Phoenix. And I'm expecting another Phoenix, which is right here. So you can just enter right there. Once you enter here. This is your entry, or you want to wait for this to break. So this will be your entry candle. Okay. So if you wait, then this will be your stop loss. Okay. Your stop loss right there. So you can decide to use this Fibo level. You can decide to use this Fibo level as your exit. You can exit here. You can decide to exit here. And if you want to wait for the red Phoenix, this red Phoenix that formed here actually formed in this place first. So you can also exit in that place. So you can trade. This is a 1 hour. If you are trading your own personal account, you can use this also on on higher time frame. You can use it on smaller time frame. You can, it depends on you. With this system, I was able to guide myself against a pair 4 days ago, and that was the GBP USD. If you look at GBP USD, I saw this on daily. I saw this on daily. In fact, I sent it to some friends. Let me add this. So I saw this. I saw this on daily, and I said, "Oh my God, this is going to be a good opportunity." But then I started running it through my check, and I had to stop. Why? Number one, take a look at this place. I saw this place. This was what I saw first here. This bearish momentum candle. So I was expecting that, oh, this is going to continue downward. This is going to continue downward because with this. But then I cautioned myself because of this. The same thing repeats. History repeats itself most of the times in Forex, even in life. So because in this place, it breaks down, but immediately reverse up. Okay? It breaks down. So the rules are rules, right? It's not 100% because if you follow all our rules right here, number one, especially on higher time frame, you would have just, enter right there thinking that, oh, wow, I got a jackpot. But then it didn't work. So why didn't it work? Because number one, I have my green phoenix here, and this particular red phoenix that shows here, this was where it was showing that time. So it's like, okay, yeah, this is good. But then if you had entered here, it would have been, at least you would have made some things down. Okay? Are you guys getting all of this at all? I'm just pouring my heart to you because these are the things that I've discovered of recent. It's not all of you. Some of you still believe that, okay, there's still life and there's still a lot of money to be made in Forex. This last 1 year, I've thought about a lot of things, even touched my hands in a lot of things, went and do some IT certification. But then, honestly speaking, each time I put some of them by the side of Forex, there's none of them can be compared to what the income Forex can give to you. Okay, I'm an evangelist of Forex. That's why I'm the Forex apostle. And even though some of you have been burnt, just like me, but I still want you to know that if you can caution yourself, it's just like a motor car. Okay, you had a wreck. You don't say because you had a car accident and you will not drive again. In fact, people that died or that were injured or the victims of this car wreck, they will use another car, ambulance, and so on and so forth to still take them away from it. So, yes, you've had a wreck, trading Forex, but trust me, you can still use the same Forex to rescue yourself. Okay? But provided this time around, you apply shock cars and guide yourself against loss. Like for instance, right now, if I don't see if I don't see that trade clearly, I don't just jump into trade. I guide myself, and I don't mind losing an account, but then at least I will know that, okay, I did what I'm supposed to do. Something happened to NASDAQ. NASDAQ, I think on Monday, last week Friday, I entered a trade, and NASDAQ, it began to go up. That was on another account. But if you follow NAS, you will see at this place, and it started going up. I had to close this trade right here because the account was already on minus 13K or so, and the maximum drawdown of that account where I was trading was 15K. So I exit here. It's like they were waiting for me from the village to exit the trade. Immediately I exit the trade, see what has been happening. So that happens a lot. And that trade, I enter a trade because I saw this. I entered the trade from here. I put my stop loss here. And of course, it went up here. Okay. No, actually, that was not the trade. That was not my entry because it was against me. Anyway, I think it was here. Okay. I entered the trade here. But then I put my stop loss here. It came here and I think something happened. I went away from my desk, and I thought I put stop loss, but I didn't know that I did not. You see what I'm saying? So, and what happened? Boom, like that. And immediately I exit the trade, it just come against me. So things happen. Remember, we are talking about almost $7-8 trillion market. And just right there is just around $500, $1,000, $10,000 is nothing in the market. There are market movers, but then if you can't win them, you can still outsmart them. And that is why I've decided to share this system with you. And I hope it makes sense to some of you, and some of you that just feel that, okay, this doesn't worth it. Well, I will still ask you to have a rethink. So I'm going to take some questions for the next 10 minutes, then we'll call it a day. So you can go ahead and ask questions. You can enable your sound. You can talk. Awesome. Okay, guys. That is it. Any question, please? Any question? You guys can unmute yourself. You can talk if you. Any question, guys? Can we get a copy of the webinar? Well, I think I recorded it. I hope I did. Okay, yes. I recorded it. I will make it available. Okay, I will make it available. Any other question? And I sent my template. We can unmute. I believe you can. Please try again. Let me see. Oh, sorry. Okay, now you can try it again.
Okay, nice working.
Okay.
Yeah, my question is this a system we are waiting for, or
no? This is not expert advisor. This not this is not a robot. This is a mechanical system that just like Tradematic, just like FX Sniper. Yes. That reminds me. I told you guys that you can also combine this with some of the systems that we have used in the past, and it will help you to also kind of remember what I said about cell phone. It's like you have a cell phone, okay? You have this one here, and you have this one here. So there are a lot of tools, a lot of devices they remove from this to create this. So you can also create yours. So like for instance, like here, you can decide to add I believe, let me use this let me see this no, let's see this. Okay, so you can decide to add FX Sniper. If you do, let me see, do we have FX Sniper here? No. Okay, let me check. Hope I added it to this. Let me see this one here. Oh, I guess it's on another system. It's on another system. So you can add FX Sniper to it, and you can just set it. Give me a minute. Let me take a look. But if you have any question, go ahead and ask a question that will.
I have a question.
Go ahead.
What is the difference between this awesome oscillator? Is this awesome oscillator better than MACD? Because it seems to be so confusing. Sometimes you have the color straight, and then you have it all mixed up. So how does it really help you in taking your trade decisions?
Yeah, awesome oscillator, as I explained, it's just like a MACD Pro that I have. So Bill Williams also created his own and call it awesome oscillator because it's the same. It was created by the same author. So that's why I decided to use it with Alligator. Do you understand? But you can still use MACD, but I decided to use it together because it's by the same author, the same inventor. So I think it's just good to synchronize each other. But you can use MACD. Like for instance, this is the same system we're looking at. This is MACD. This is MACD Pro that I created. But if you look at the awesome oscillator, it's pretty much almost the same thing. So, but since this system uses alligator, that is why I decided to use it with it. Does that make sense? Does that answer your question, man?
Yeah, yes. Okay.
Okay. So I was trying to look for, I thought I have FX Sniper on this. I think it's on the other system. So you can add FX Sniper, you can add inside bar, and it will also help your entry. Let me quickly add inside bar to this. Any other question, please?
While you're adding that, my question was, I know you have the option to determine which time frame to use, but from your own experience, what time frame works best with this system?
These days, because I trade with prop firms, and most of them will expect you to close your trade by Friday here and there. So I trade mostly on 15 minutes and 5 minutes, mostly. But I still look at what is happening on 1 hour.
Right, thank you.
1 hour, 4 hours, because that also will put you out of a lot of trouble. Any other question?
Apostle, what are the manual settings for the oscillator? If you wanted to put that on your phone.
Oh, for the phone one, this is no clear. I just use default. I just use default value.
Okay.
Yeah. Maybe when next we meet, I will show you guys how to do that on your phone, but it's just the same thing. You just go to your settings and just add it. If on MT4 you see it under B Williams tools. And if it's on your cell phone also, I believe it's under the same name.
Okay, thank you.
You're welcome. Please give me a minute. I'm just trying to add the FX Sniper to the MT4. Any other question? Any other question, guys?
I think the other question I wanted to ask was when is the EA going to launch?
The EA is coming very, very soon. Guys, we are adding a feature to it based on the testing. I wanted the developer to add a retest, more or less like we are combining some features from FX Sniper to it, such a way that when it breaks out, because it trades breakout actually. So when it breaks out, you will have an option to allow retest or use like the one candle bar instead of using a specific number of pips. So all those, but before end of this month, by His grace, I think we should be able to have our hands on it.
Okay, that's brilliant. Can I also ask, with this easy Peasy 360, yes, is there any alert? So can that Phoenix, would you say to allow that big Phoenix to be your alert, or if you want an alert?
You can set Phoenix to be your alert. Remember that Phoenix has a settings whereby you have the sound. So if you have the sound enabled, yes, you can have that such a way that anytime there is opposite direction, you can know, and then you can monitor when is the right time for you to pull the trigger.
Okay, thank you, sir.
You're welcome. Any other question, guys? I've not heard your voices in a while, so please let me hear your voice. Okay, let's see. Okay, I think we are, let me quickly, now we are share, yeah. Okay. So sometimes the indicators have to wait for the market to be live before it works, but let's let's hope that it works. FX Sniper. So with the FX Sniper settings, what I do, if you are using it to trade Asia, I actually have a settings that I use, but let me just, let's see if this way. Sorry guys, I'm just trying to show you guys once in a while, once and for all. I hope it does. Sometimes the market has to be live before. Yeah, let's use the inside bar. Then maybe when next we meet, I will show you that other one. Okay, let me share this. Okay. Can you guys see my screen? Can you see my screen?
Yes, we can see.
Okay. So like I've tried to sometimes with the FX Sniper, the market has to be live before it can be enabled. But then if you, let's assume you are trading with, I will explain that one later. So I added inside bars. You guys still remember inside bar, right? So if you are trading with inside bar, let's look for an opportunity here. So let's say, for instance, like, let's see which one is, let's take a look at. All right. So something like this. I use this also often. We remember the tomato color of inside bar. So sometimes when I see this and I see the Phoenix, and of course I know this is a reversal, so I can also enter right here. I put my stop loss there, even though it's against this trend. Remember, there are times you trade against the trend. It's just put you into trouble if you don't know what you are doing. But then if you want to be very, very conservative, you use this, you use this a lot when it's working with your trend. Let me go to, let's go back to US 30. Let's come back here, see if we can add it here. Okay, so something like this. Something like this, you can use it like here. Remember here, we already have the Phoenix. Then we have this inside bar close under the 200 moving average, and you already see that okay, if you want to wait, you can decide to wait for this to also cross over. But if you're an aggressive, you can actually go short right there. Your stop loss will go right above there. You can see your what you are risking is very, very small, and you just write it down. And if let's say, okay, you missed the trade when it started and you are looking for another right opportunity, this will be another right opportunity, but then it's contradicting this one. Another one there is you enter right there short, your stop loss come right there, and you can also make it down. But if you will see the beauty of that, if you happen to be trading on, let's say, higher time frame, like 4 hours, or like, for instance, like this place now. You see right there, you see the trend is down. This is 200 moving average is down. Our awesome oscillator is down. Then you see this inside bar. So you can decide, I mean, based on your analysis, you've seen that, okay, this is definitely going down. You can have either a sell stop order right there. Then your stop loss will come over there. Then you can do 1-to-1 or 1-to-2, or just wait for the opposite Phoenix to show. So that's how you use it. And you can also use it with FX Sniper, as I said, to trade your breakout, either Asia market or London or even New York. Maybe next time when we meet, I will show you how to do that, or you can just practice that or demonstrate that on your own if you have FX Sniper. Okay, guys, it's been over an hour and it's been an exciting moment spending with you once again. I really appreciate some of you that still believe that we can do this and we can move forward. So we move. If you have any question, please, you know how to get me. And if you don't have the template, I sent you guys the template already. But if you don't have the template, you can message me. You can message me on WhatsApp. I will send it to you. My WhatsApp number was disabled for some weird reason. Also, a lot of things happened last year. Someone said when it rained, it pours. But then we keep moving. So you can get me on WhatsApp by, I think, I don't even know that my WhatsApp number offered. So let me look for it. It's a 214, hold on, let me, 214-444, 214-444-3611. Yep. So you can get me right on that on WhatsApp, and I will reply you with the template. So you can just or you can just install it directly by yourself on your own system.